Hey guys, this is Pete from Pete2Cents.com, February 25th, 2010. It is 4:43 and the day is over. What a ride we had, what a ride. The market started thrashing down, almost hitting 200 points in the Dow, and started shaking a lot of boots. And of course, the noisemakers, talking about the shorts, came out in rah, rah, rah. Well, lo and behold, the rah, rah, rah was short-lived, and the shorts got squeezed. Okay, shorts got squeezed. The market was approaching 200 points in the negative as far as the Dow. The other two indices were also following in trend. And a little bit after lunch, I started seeing a lot of buying volume. So I tweeted that out at twitter.com/Miami Pete if you ever want to follow. And I saw the buying volume, and I put that out, and I started making some additional purchases, adding to some of my positions. The shorts continued. You know, I see the shorts talking in the mainstream media, CNBC, Bloomberg, you know, talking their crap, bottom line. On Twitter, talking their crap, bottom line. And at the end of the day, we closed at Dow down 50, S&P down 2, and NASDAQ down 1. So with that said, if you had bought on this dip today, you would have made some money, okay? If you see buying volume, and volume is king, the same way cash is king, volume is king, okay? If you see that volume starting to increase in either direction, you either watch out or you buy, okay? Or you sell. One or the other. I mean, the volume are these institutions coming in with thousands upon tens of thousands of shares of stock, moving individual stocks, moving an industry, moving a sector, moving the entire market. Okay? Don't forget that. That's what controls the markets, the institutions. Everything else is noise. Of course, you got to follow the fundamentals, as I always say, but follow the volume. The volume is a strong indicator, okay? And sometimes it can trick you as well, because I've been tricked a few times. You got to, take a second glance at it. But if you've been watching your chart and there's other indicators and tools, I mean, I'm not telling you to go buy any tools that talk about volume. You don't got to buy anything, okay? Just a standard chart, and you see, obviously, a real-time chart, and you see that tick moving upward, and you see the volume increasing or decreasing or accumulating or depreciating, make a move, okay? Especially if it's a significant move like today, almost approaching 200 points. So with that said, S&P 500, we're looking at a 6-month chart, okay? And you'll see this is important. See this channel trend right here? This is going to be important in a minute. We've pulled away from 1050, as I've been talking about, 1060, 1090, okay, which was, I think it was 1092, which is a number I've been discussing the last couple of days, and that's a bit of a concern. So we approached that, and we actually blew through 1092 a little bit. I think we bottomed out 1088, but 1 or 2 points never really shakes my boots. So let's pull this up a little bit closer, and you'll see my trend line here, which I moved, okay? I moved it to follow, just because I moved the trend lines depending, just so I can give myself some kind of guidance if I see any other positioning or traction in one way or another. So you'll see the concern here was the 21, and exactly that. The 21 was crossing 1090, a little bit less, and we popped a little bit lower than the 21-day here. But then we found a lot of support. There was a lot of buyers coming in at the 21-day. We pushed forward, and here we are closing at 1102. With that said, I think we can push through the 50, which is at 1110, and then get back above this, which is 1120, and get back into the channel trend. If we do that, we'll be on an upward trend within the channel, and then 1150 is a no-brainer from there. Okay, guys, keep that in mind. I'll be coming out with a stock pick in a little bit. Pete from Pete2Cents.com. Thanks, guys.